Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the deep dive. We are jumping straight into the source material you provided because, let's be honest, looking at the charts right now, things can feel overwhelmingly negative.
They really can.
If you've glanced at market sentiment over, say, the last 72 hours, conditions have definitely not improved.
Not at all.
We're sitting firmly in the fear zone. The current number is 24, so it's really tough to feel bullish when all the immediate indicators are just flashing red.
And that short-term fear, it's absolutely reflected in the hard data and the money flows.
Right.
What we're seeing is significant capital just walking out of cryptocurrency ETFs. The total outflow is close to $250 million.
$250 million? Wow.
Specifically, 244.03 million.
Okay, so where is that coming from mostly?
Well, Bitcoin is leading the pack, which is natural. It's seeing outflows of about 194 million. And then Ethereum is contributing another, call it 74 million exits.
So the two biggest players.
Exactly. And if you look a little deeper, the volume for Tether, USDT, it's almost half of what you'd expect at this point. That's a huge signal that near-term liquidity and trading activity are just critically low.
Yeah.
The market is.
Yeah.
It's waiting.
And
maybe a little scared.
Okay, so undeniable fear in the short term. But that's why we're doing this deep dive.
Yeah.
You handed us 4 major, and at first glance, seemingly unrelated news stories. We're talking U.S. state policy, French banks, tokenization, Middle Eastern government adoption, and together they paint a completely different picture.
A very different one.
So our mission today is to look right past that short-term fear and dive into these 4 major structural shifts. Our thesis here is that the infrastructure being built right now is setting the stage for institutional support that, historically, always comes before a new all-time high.
That is the paradox we need to unpack. The money flow is short-term, right?
Okay.
But the policy and the infrastructure being built, that's permanent.
Okay, let's start in the U.S. then, because this move coming out of Indiana is, I think, highly significant. We're looking at a bill from a Republican state representative, Cal Pierce.
Right.
And this bill would drastically expand crypto investment options for their public retirement programs.
This is a massive signal shift, especially from a conservative state. And the implications, they run really deep for, millions of everyday Americans.
So what's the core of the bill? What does it actually do?
It allows Indiana's public retirement program to offer regulated crypto ETFs. We're talking Bitcoin, Ethereum, Solana, XRP, and various stablecoin ETFs.
The big ones.
The big ones, as just regular standard investment options for its employees.
So this is pulling crypto directly into the most regulated long-term savings vehicles we have in the U.S.
Exactly. We're talking about 457 and 401 participants. For you listening, these are the U.S. deferred compensation plans. These are the retirement funds for teachers, police officers, firefighters, state employees.
The people who historically are very risk-averse. They're focused purely on steady, long-term growth.
Precisely. And this bill means they could soon become long-term buyers of regulated crypto products, all through the infrastructure of their employer-sponsored savings.
This sounds great for the end user, but what's the direct financial incentive for Indiana? I mean, why would a state government push for this?
Well, there are two major financial motivations in the source material. First, it lets the professional managers of these public pensions allocate a portion of their funds into regulated crypto ETFs.
The same ones BlackRock and Fidelity are using.
The very same ones. And the stated goal is to improve long-term returns in their diversified portfolios. They see it as a modern diversification tool.
Okay, that's the pension side. What about the state's own cash?
And this is where it gets really interesting for capital efficiency. The bill allows the state treasurer to invest idle state cash.
So the money just sitting in the treasury.
Right. Money waiting to be spent or allocated. They can put it into yield-bearing stablecoin ETFs. These are currently yielding around 4 to 5%.
Which, compared to traditional treasury bills, is a huge step up.
Yeah. A highly optimized return with virtually zero volatility risk. They're essentially monetizing their idle treasury funds using crypto rails. It's incredibly smart.
And a stark contrast to how sovereign cash is usually managed, where you'd be lucky to get 1 or 2%.
Exactly. But there's also a crucial policy angle here. Protection. The proposal also explicitly protects digital asset payments, custody, and mining from, and I'm quoting, unfair local restrictions.
So is this really about protection, or is it the state government overriding local control? What's the political trade-off here?
The source notes this is designed to stop, say, a local city council is anti-crypto from banning regulated activities that they already allow for stocks or bonds. So yes, the trade-off is clear. The state is choosing financial innovation and economic growth over local regulatory power in this one specific area.
It's a huge signal that they want blockchain businesses in Indiana.
It sets a massive precedent. If a conservative state is putting its teachers' retirement money and its own treasury on crypto rails, that radically validates the entire asset class. It moves the conversation from, is this legitimate, to how do we best integrate this?
Okay, that's the U.S. story. Now let's flip to the other side of the coin. International retail demand. For years, you had to go to some dedicated, maybe offshore exchange. But now we are seeing major financial gates just swing open. Let's shift to Europe and the French banking giant, BPCE.
BPCE is one of the largest banking groups in France.
Okay.
And through their crypto subsidiary, which is called Xorg, they are rolling out crypto trading for 2 million of their retail clients.
2 million, so this isn't some tiny pilot program.
Not at all. It's a full-scale integration. Their customers can buy and sell major assets, Bitcoin, Ethereum, Solana, and Circle's USDC directly through their existing bank interface.
And you have to think about the psychological impact there. You don't have to download a new app, go through a new KYC process, or trust some entity you've never heard of. You're doing this through the same bank that holds your mortgage.
That shift is huge. The bank is selling convenience and safety. The structure is also pretty interesting. It's a monthly fee of about €3, plus a 1.5% commission per trade.
How does that fee stack up against a normal crypto exchange?
It's a little higher, sure, than what you might find on a bare-bones exchange. But that premium is for convenience, it's for insurance, and it's for regulatory compliance. They're handling the hard parts for you.
And what's the plan for the rollout?
So it starts with 2 million users, but the plan is to expand it to all 12 million of their retail customers, possibly as early as next year.
12 million potential new users.
From just one bank. And this isn't an isolated event. You have European banks like BBVA, Santander, Refis, and they already offer similar services. So there's a clear trend. The banks aren't fighting crypto anymore. They're onboarding it.
And that idea of onboarding sophisticated tools brings us perfectly to our next topic, tokenization. This is really the ultimate convergence of TradFi and blockchain. Let's talk about the WisdomTree APXC fund.
What's so fascinating here is that WisdomTree is taking one of the most sophisticated institutional strategies, a professional put-writing strategy, and bringing it directly on-chain for everyone.
Okay, we need to pause there. Define put-writing strategy for us in simple terms.
Right. Think of it like this. You're selling someone else the right to make you buy an asset at a set price in the future. You're basically betting the market won't fall below that price.
And for taking that risk, you get paid a premium.
You collect cash up front, a premium. The APXC fund does this specifically with the S&P 500 EPF. The whole point is to generate regular income while managing volatility and reducing your overall portfolio risk.
So it's a complex derivative strategy, but now lives on the blockchain. How does being on-chain actually help?
It changes everything about transparency, settlement, and collateral. Traditionally, derivatives can take days to settle. By running all transactions through blockchain-based accounts, you get instant settlement and total transparency. You can see the assets move almost in real time.
So the blockchain isn't just a wrapper for a digital asset. It's an efficiency layer for the financial product itself.
That's it exactly. And this APXC fund is WisdomTree's 15th tokenization fund. So this isn't a one-off. It highlights this massive focus on digital blockchain-based products. It really echoes we hear from Larry Fink at BlackRock.
Right, the idea that every stock and bond will eventually be tokenized.
And this is a real step in that direction.
Okay, so we've seen U.S. policy validating long-term savings, European banks opening retail floodgates. Now let's go to the MENA region, the Middle East and North Africa, which is positioning itself as a critical global hub. Two themes here: market consolidation and direct government adoption.
Starting with consolidation, which is always a sign of a maturing market, we saw the huge acquisition of CoinMENA by the Turkish fintech giant Paribu.
Tell us about CoinMENA.
They're a licensed exchange operating in Bahrain and Dubai with about 1.5 million users across 45 countries.
And the deal size was pretty significant.
Up to $240 million. This is Turkey's biggest fintech acquisition ever. And it's the first cross-border crypto deal of this scale. It just strengthens the licensed, regulated infrastructure across the whole MENA region.
And why is that consolidation of licensed infrastructure so important for the macro picture?
Because institutional money, especially from places like the Gulf states, demands highly licensed and trustworthy partners. This move signals that the Wild West days are over. They're being replaced by strong, consolidated, regulated companies, and that builds confidence for the next wave of capital.
Speaking of regulated entities, let's talk about Dubai, where they're integrating AI and blockchain directly into government services. Tell us about Cybergear and their AI agents.
This is a huge efficiency push. Cybergear is building multiple AI agents for different Dubai government entities. The goal is to radically speed up processing times for things like applications and documents.
Down to what, an hour?
Aiming for under 1 hour, yes.
So how does it actually work? What do these AI agents do?
They act as a virtual committee member. They use things like optical character recognition, OCR, and natural language processing, NLP.
Meaning the AI can read and understand documents.
It can read and understand them. It validates everything automatically, detects if files are missing, runs eligibility checks against the official rules, and then gives an approval or denial recommendation to a human. And, crucially, it creates a full blockchain-secured audit log of every single step.
That is incredible efficiency.
Yeah.
What's the projected ROI for the government?
The source is really specific here. It projects a full return on investment within just 90 days, based purely on the labor and time saved.
Wow.
And that focus on efficiency leads us right to the other massive public-private partnership in the region, the one between Dubai Customs and Binance.
Dubai Customs and the world's largest exchange. That's a powerful statement. What's the practical goal of that agreement?
The main goal is to shape the future of blockchain-driven customer services, specifically by integrating digital asset payments through Binance Pay directly into commercial and logistical transactions.
That sounds like a great headline, but for you listening, how does using crypto for payments actually improve logistics in a major global trade hub?
Well, it addresses a huge pain point in international trade. Normally, customs payments rely on interbank settlement systems, which can take days, sometimes weeks, to clear.
Right, especially for complex global shipments.
Exactly. By using Binance Pay on the blockchain, the payments and the required documents are all bundled and settled instantly. It just bypasses that entire weeks-long verification process.
So goods move faster, capital isn't locked up waiting for a bank to clear a payment.
You got it. It's expected to boost import-export efficiency, slash processing time and costs, and improve transparency across the entire trade process because it's all on an immutable ledger. This is a critical piece of Dubai's D3 economic agenda. They want to build the world's most advanced customs system, and they're using crypto and blockchain to do it.
This is a truly comprehensive global view. Let's try to synthesize all of this. We've covered U.S. public pensions, French banks, tokenization, regional exchange consolidation, and direct government adoption.
So if we go back to that central question you asked, are we entering the next major cycle? It's complex. You have to accept that despite the undeniable short-term pain you see in the ETF outflows and the fear, the macro picture has fundamentally shifted in a way we just haven't seen in prior cycles.
So we're asking you to look past the red charts for a minute and focus on the bedrock that's being laid. What is the ultimate takeaway from all this convergence?
I think we're witnessing a multi-pronged institutional convergence.
Yeah.
It's moving way beyond simple speculation. This isn't just about hedge funds buying Bitcoin anymore. This is about deep structural integration.
Right.
When regular teachers and police officers can get access through their regulated retirement funds, that brings in stable, long-term, risk-averse capital. When 12 million retail banking customers in Europe can easily buy crypto from their trusted bank, that's mainstream demand validation.
And when you add in sophisticated financial tools like these tokenized put-writing strategies being used to reduce volatility, you're fundamentally changing the DNA of the asset class itself.
Absolutely. Then you have a government body like Dubai Customs adopting crypto payments because it makes their global logistics faster and cheaper. This confluence of macro trends, this shift toward regulated, integrated, accessible crypto is what historically sets the foundation for Bitcoin's next major rally. It looks exactly like the early stages of a new institutional cycle forming right now.
It changes the whole conversation, from short-term price swings to long-term structural foundations. Thank you for helping us navigate these sources and for taking this deep dive with us.
Of course. But before we go, here's one last provocative thought for you to consider.
Go for it.
If tokenization, like that Wisdom Tree Fund, and regulated crypto for public pensions, are designed specifically to provide long-term income and reduced volatility for risk-averse investors, how does that institutional embrace fundamentally change the risk profile of the entire asset class? What does volatility even mean when the very foundation of the market is being actively supported by sovereign entities and major banking giants?
Something profound to mull over as you watch those short-term charts move. We encourage you to continue your exploration of these themes, and we will catch you on the next deep dive.